Oh, yeah, thank you. Yeah, so basically, you know, taking this out of the chat right here, we're looking at it. This is what I was posting, and effectively, it's a very similar chart to what we've been seeing. The final red yellow line to break, it's very far away. And it's going to take some discipline to hold out for its break, but I'm confident that it will break and continue its all-time highs. Those that are still in from before 16K are not as likely to be part of the next major retracement, but anyone above it, buying above the old all-time high, is buying above a potential B point in the long term. In the long term, basically. They may just frequently get tested as we pass it. So like as we've seen on short term uh, W's when we form them, uh, it might actually test the B point a lot as it's just passing it, and then actually test it in the future. And these kind of moves right here can really seem like what we've done on the daily. Like even when we're making a smaller one here, like these smaller tests that we can do as we pass it to make a W could be what we're seeing on the long term. So keeping an active management style is key, especially if you're late to the party, because then you have to worry a little bit more about it coming back for you because you don't have as much room, So there's a better chance that you're going to be part of the next major retracement. But I mean, if you're above the long term B point, I mean, it's very likely that you're going to be part of the next major retracement. But if you have the long and you're still riding it, the name of the game is to take advantage of the short term dips while the exposure to the upside continues to benefit the long term. So you keep that long term back burner trade going as you focus on all the short term dips that can happen. So you're not even focused on, hey, where do I try to go long and short? Half of it's already guaranteed to be profitable, so long as the market continues to go through all-time highs. It continues, you know, as it will. Um, and it's not like I've just started saying that either. It's the strategy for the environment that we're in. The best way to do it, as I see it. Um, that's been the case for quite some time. It's funny. I typed in the name of the game. I don't know. Literally, that's what I keep saying. The name of the game, funny enough, if you have the long and you're riding it, the name of the game is to take advantage of these short-term dips. That's what I said today. And exposure to the upside continues to benefit the long term. All right. The name of the game has been to hold. It's been choppy for anyone that's tried to get exposure today. With any long trades can still be held. They haven't been threatened. The name of the game is to find a hedge. The name of the game again is to find hedges for today. Any positions that have been held overnight. And it's like, look at the dates. You can see um, we're going into November. Notice it was key to keep the core unless you wanted the in from the high of the range. The name of the game is to keep the long running and find hedges against it. And we continue. The name of the game is to find a hedge today for any positions held overnight. That's a different day than the last time that I said that. and we keep going back. $11:06. The name of the game today is because it's funny that they name themselves hedge funds, and I've literally said the name of the game, the name of the game, the name of the game, and I'm like, well, it's funny. The name of the game today is to get hedge positions for any trades held over the weekend, not here, but in general. What we're doing is currently a large triangle, and we may be in phase where we're leaving it. So basically, and you can see that this is November. No stops above the red zone for any positions held towards the B points above. Hedges are the name of the game. Finding a hedge for that trade is the name of the game. It's not worth giving up the long from the lows. That's in October. Yep. Yeah, yeah. Yeah, Merry Christmas, man. Yeah, Merry Christmas. Have a good one. Oh, wow. Yeah, time difference. Mm-hmm. Oh, that's perfect then. Yeah, this could be like a little fake out to the upside. Yeah, it's an interesting pattern altogether because it did have this bigger one as well, and then on the right shoulder it also has like this kind of look to it. Ultimately, I think that it's going to go higher, but we still have a ton of space. So like faking out patterns first could be the goal before we fill that space in. Like one thing I can see with this node right here is it's very even out of both sides, and like That could be intriguing because I've got like this little bit of volume on both sides as well. Like I think that's pretty appropriate for red zone, green zone. I think what we could get is something like it leads people on and we take that position back from them, but then we actually rally the next time because it'll take so much energy away from people to have it go well and then come back. And then again, the next time you can count on the fact there will be like significantly less people. And I think that that is an effective method for being able to go higher when it makes a triangle, and it could do that by, you know, triangulating like this into a triangle and then effectively spiking up, spiking down, and then spiking up to get to the next level. Yeah, like that's what I'm thinking with this line right here. Like when we're finished with it, it's just responding to that view app that we're about to hit right now. Like that's a questionable level that could take back the majority of this move. So it's not safe to drag any stops like above the B point in there or anything like that. Funny enough, it doesn't actually have to come all the way back to test the B point. It could leave a little bit of a gap by just hitting the high of the node there. But I can't help but notice that the distance that it chose to make across the top there is very, very similar to the distance that it made along the bottom. And it's not like we haven't seen that before either. It was I didn't mean to bring that up, but it actually just made me look across the highs there, and I did notice that it was actually used there too. But that's okay. You can see how that move was just taken back like that, eh? Like it was a freaking fake out. Like it I could see it a mile away. Like they were literally interested in wasting people's time. Like they got them all excited for nothing. People get an emotional rush when they see the numbers flicker upwards, and now they're absolutely distraught, and they'll think twice about going long. Ironically, doesn't change the fact that this is the last line to break. This is the final break. The strategy that I've entailed is being implemented perfectly by the compass of man, should I say. Whoever decides that the market moves like this, implementing it perfectly. And it is a trap. This is how a trap happens. And it's only because I've been in this trap that I've understood how it works. And I'm like, you only need to burn your hand so many times or see other people go through struggles with it that you can see it. It's a lot easier to gauge when that problem arises, understand everything about it. If you could see the necessity for it, I'm like, oh, that would get them good right now. I'm like, because it got me good before too. I know, it's not like I was born with the information like this. It's just like I've been in the environment to see that play out. Okay. You could even see that the negative response to the view app, it was the consideration that I had as well. That was what happened. And it's that view app too. Ironically, a view app that I think many people will have. Like a lot of people just have QQQ view app. I mean, where is the view app gonna begin for them? Beginning of the day. Just out of curiosity, I'm curious to see. Yeah, that's the VWAP for them. So a lot of people just saw it run into the VWAP. Like a VWAP band, yeah. Yeah, and that's a dangerous way to test the VWAP band too. Uh, Ironically, when I was talking about it earlier, this test out right here, how that began was we were grinding the high of the VWAP band, and like it was essentially the price was sitting on top of the VWAP band, and the VWAP was like kind of underneath like that, and we tested the VWAP band from the underside like this, and then it fell off, and that's how this move happened. It was from that point that it was like, well, you got to be careful about that underside test of that top VWAP band, and it came down hard. This is an interesting level. I kind of dimmed it out, but it's been getting a lot of action today. Like if you consider how much of a response that we had to the downside there, and how much of a response that we had here, suspicious to me that it worked like that. It's a blue zone, and it's just an abstract level that basically I put in there because it would have been tripling the pattern that we had a long time ago. It's kind of hard to say that it truly would have any kind of relevance on a day like today. So I find it strange that it's even being used like that, which is kind of weird. Okay, I just recognized as well that this area of this chart, I haven't really looked at today. This zone. I'll take a look. I do like how that's being used. Mhm. there is like a very steep short-term downtrend right now. This one has been broken as it's an uptrend, but we've retested it on the short term already. Kind of significance. We're attacking it, but the first initial break, this point we could get a little bit of chop, a little bit of a spring to the spike maybe. It's like it's feeling the green zone. Oh, hold on a sec. Okay. So, a little bit of a spring to the spike basically. It's interesting that the green zone is the 61 as well. take a look. Yeah, it came up to hit it. Yeah, it crossed my mind that perhaps the distance that we can spike out of the bottom of this range is what will initially put out of the top of it when we're done it. It does give me the vibe of the hourly chart, remember, that I made the trading view video of, where everything is kind of like B points across the medium bar, this gold bar. It's giving me that vibe right there, except the spikes and wicks out of the bottom would be what would come next. It's kind of like it's like the SOW in phase B right now. Um, uh, the 100? I mean, it's not a level that I would ever. It's always for taking profit, and you always uh like if it's placed like this, then it's good to come back up to when you're going long off of these levels. But you know, falling through it to get down to these levels is usually what we do to come back up to it. So it's like it's only a profit target for if you're coming back up to it like that. But if I was to place it like this, um, their profit target, it's only coming back down to it. So it depends on how you place it. So like if you're if the levels are presented on the highs, then you're coming back down to it. If they're presented on the lows, then you're coming back up to it. But the 100 is always the B point, like always the B point. That is the B point always, 100%. So that's the level I always put a green dash line on, just to highlight it because it's the target for the other levels. And not the ones inside of the 0 to 100 range, but outside of the 0, like everything above the 100 is supposed to come back to the 100 essentially. So like we go for the 188 200 or the 261 for instance, back to the 100. Like in this case it's Doing a 161. So it's like basically when we see the harmonic patterns like this, if wherever we see an opportunity to draw fibs from the B to the C, they present levels that the D can respond to come back to the B. I just took some off there because that's the B point, or the green zone, sorry. Okay. The medium bar is also good. So basically in these areas here, you would place a fib from here to here, and you would get these levels to come back to the 100. See, the 100 would always be the B point there. But then in this case, you would place from the B to the C, and the 100 would be here, always at the B. It would come back down to it. So any orders that are in there are now getting filled. I think this is going to look like an all-in-one, where it starts out looking like an M, but it actually is a bigger W than the M. And any stops dragged above the green zone are going to get smoked out too. I think that we return back to the tip of that triangle soon. Like that's a B point right there, ironically. So interesting. Because I just continued taking a look because I looked over at the Discord and I saw that I kept looking at the name of the game stuff and effectively every time that I talk about the name of the game, it's funny that I'm mentioning like hedging and so on. Same variable as the last gold bar. Let's see, not worth giving up the long from the lows. But then before this, oh, I have another one in there. Name of the game is to capture a short hedge if you have a long trade going. Um, Common mistake is to give up the original trade of the morning, start fighting against it when the name of the game is to focus on the long-term price targets. If you're still in from last week, the core should be short. And that's funny because that was when we were talking about. I was just looking at the dates on that, and that was when we were coming off in September. Common mistake is to get because we're talking. I did all of October, and that was when we were reversing up. Now 724. Talking about the name of the game is to focus on long-term price targets. The core was short from up here basically. Everybody was like, looking for trades that you can hold for the long term, and it was clear that it was coming off. So, then you'll see how many times the name of the game in this month was shorting. Keeping the short from the highs is the name of the game. Hedging against it with half or less, there's no better way to do it. It's human to have given it up and started to go long instead. The name of the game is to end the day with a short, safely protected with a stop. The red bar, that's particulars. Then we go in here. This is still 7, 12. So that was like here. 7, 12 is here. The name of the game is to finish the day with a short that's protected with a stop. Movements to the upside. This is 10. Could be fake outs. Beware ultimately ending the day with a short with a stop and profit is the name of the game right now. When you've captured it, focusing on counter trend moves to the upside. Yeah, keeping the short running is a great idea. Finding hedges to make it safe to hold is the name of the game. And we keep going. The name of the game today is to catch the highs. Keep them. You aren't already short from yesterday. Yep. Holding short into every day if you have nothing is the name of the game. Never just said to sell it. Great job. Any hedges should be profitable. By this point, from the wedge of the consolidate, or sorry, any hedges should be profitable by this point from the wedge or consolidation. Ensure safety. Targeting the blue and white line is important before the channel above. Ultimately, I'm bearish, so keep the short. Hedging against it is the best way around this if you still have it from last week's high. That's a great idea. Oh, we're getting some nice movement there. Yeah, it's crazy when I continue to see, It was like even back in the June, finding a hedge is the name of the game. The value doesn't change. The green zone just had an initial positive response. The red yellow downtrend is more of a risk than the purple. Yeah, it's all about hedging. I keep talking about it, keep talking about it. You're doing it right. You're still holding long from some time ago. So that's 620. And that's when we started here. That's when it started to become very, very serious where, we want to make sure that we're hedging against it. Hedging against it. Anybody that's long from before. Because the core was always long. Just remember that. 620. And then by 627, the name of the game was to catch the highs and keep them. And like that was basically what I was saying through this entire environment was to continue hedging because you didn't have to have this get you out of any long trades from before. But then we came down to that October reversal where I made a video on that day of reversal. And now I said to keep it going. Yeah, 0428. It's funny because we still got pages of the name of the game. And it's like, it's really interesting when I say about it. Increasing the distance between the hedge and the core is the name of the game. Something to consider. Best believe the name of the game is to find the hedge. That's my mindset here. They make it difficult. I persist with the extremes. Just beware. It all leads to new lows. The name of the game is to short, long term, for now. So knowing the long term is in trouble, finding those short term highs are key. Finding a short hedge, taking some profit off and managing it so you can hold the rest for the long term decline. The name of the game. The long term is in trouble, so finding that hedge is the name of the game. Keeping long term trades from the below the green zone is important. And like, let's take a look at that green zone. Keeping long trades from below the green zone. The green target zone we're entering now on the chart usually has a negative response. Long-term level, so the long-term moves happen off of it. Gives me deja vu, honestly. Like what's that and this? Like, are we not doing that? Roughly. And the in here. Long term is in trouble, so finding the hedge is the name of the game. Keeping the long trades from below the green zone is important, you know? And that was when we were already still high. Like everybody was worried about it coming down and It came down, but it was just good for hedge traders. Short-term moves to the downside. It might not seem like much, but 508 points is a lot. 568 points is a lot while you're waiting for it to make even more. An old red zone. If it comes back to the green zone, it could be an inverse, but it might not make it all the way. A 50% retracement could be on the table though. It's weird because this is supposed to be the long-term chart. I've started drawing on it though because it was a blank chart. It was like, and then I just started with it. I was like, okay. This movement right here we might have on the other side of the final trend break. Just out of curiosity though, I do want to. Yeah, it's crazy because this is just a few months after. Still, the name of the game is to hold, get through the purple zone. Wait, ultimately keeping the red zone way above. So keeping exposure and looking for a hedge up there is the name of the game. Uh, I just want to see where it all begins. Because you can see this is exactly like what I've been saying. The name of the game, like what is that supposed to mean? Like the the motive, like the plan, like the name of the game. Just remember everything will be bought back up to the white dash line high. Remember that. Any profit you can make on these dips using a hedge as a bonus. Um, the name of the game is to keep the long running. We're yet again running for the red zone above, and we're likely to break it and continue higher. Um, and it is a line that requires readjustment. Just to be clear, the name of the game is to keep the long here. We need to ensure to keep it if we're abiding the guidelines. Finding the long is the name of the game. So this is the development of the trade. So there wasn't anything to hedge if you don't have anything. We got to go long somewhere. So but now how it's changing. So you can see as we're getting lower, it's the name of the game was to be long before this move. So just keep that in mind. The name of the game, it may take some time, but if you still have the short, I said it was important to keep. You'll have some opportunity to hedge it and capture exposure for the run up. And at no times do we sell the short, we compensate for it. This is the best way. The name of the game is to be in for them, and the market does not take uh, the trade back for a small profit. Well, you could be in for the end of the entire long-term consolidation. So February 28th was right in here. Of course, the market's continuing to try and advance on the short term. The name of the game is to be in for them. I already Yeah, see that was 0202. So February '02. So right here. The name of the game, February '02. Watch. Was to find a hedge for the upcoming earnings. Right now, the yellow line is something we are watching for a break, and that was 10 o'clock on February 2. So we're talking about anybody that's long from this move right here is meant to be thinking about hedging, not going short only, but hedging because you're not giving up the long because you know that there's a lot of value in it. A new red yellow line to be considered for hedge traders only. The name of the game is long, core is long 0106. That was '01, January 1st. Or sorry. January 6th was right here. That was January 6th right there, ladies and gentlemen. Let's click it. The name of the game is long. The core is long. That's the name of the game there, ladies and gentlemen. You can find all these posts yourselves as well. But we keep going back. If you still have yesterday's low, you have to do nothing. The report came out. It was a fake out. You can see that the red yellow lines placed accordingly. Catching the low is the name of the game. Ensure it cannot become a loss. If it makes you try for another entry, we'll find it. The name of the game is to be exposed to the red yellow lines breaking. And those were all the red yellow lines that were going down. Here and here. Not on this chart. Hold on. Not on that chart either. That was a nice chart too. Yeah, this chart, red yellow lines. Oh yeah, sorry. In here as well. Because that was like January 6th, right? So we were watching the break of that particular red yellow line getting exposed to that line, getting exposure to this one breaking. And it's like, I say this because it's, I know it's been tough. Ensure it cannot become a loss. If it makes you try for another, we will find it. The name of the game is to have exposure to the red yellow line breaking. Now I would say that because I'm like, expect to persist, and that's what it took to catch exposure to this move. We're kind of stepping on top of that line now. Well, VWAP was like punctured a little bit there, which is good. We're gonna see more of that. Yeah, and it's funny too because I go back to those times and I see the charts that look like this, and I'm like telling everyone about the blue lines and stuff like that, and that's just a jog on the memory. I'm just taking it easy. Yeah, I'm gonna meet up with the family and stuff, and just chilling out. Nothing too much. What about you? Mm-hmm. Nice. Done. Nice. Yeah, the food's nice. Yeah, I love the festive foods and stuff. It's gonna be good. The consolidation's coming to an end shortly. You remember when I mentioned that it could be like an all-in-one? See how it was like, oh yeah, everybody, it's an M. And I was like, it could be an even bigger W. Now it's a W. The final result was that the M turned into the W. Trend's breaking really nicely. Test is fine. Going back to test the red zone and the view map and so on. No stops are obviously to be dragged above the red zone. possible that we have a negative response to the red yellow line. It's not necessarily something that has to happen, but something that has been happening. Something that should be allowed. You can see it's come back to test the red zone as well. That's the high of the node. Just a fake out. I'm surprised that it didn't step on the gold bar in the middle more, to be honest. But you want to know what this looks like to me? When I did this one. And that went like this, basically. Or wait, like this. And just to go back over today, like I mentioned, but yeah, no, sorry. What I will do actually is just go over the legend real quick. Basically, this is a explanation of the levels that I use, way that I've color coded them, and basically the blue lines are abstract lines. They're barriers, levels that can prevent you from getting to targets or take time away from you. Essentially, yellow lines are lines that break with impact, lines that change the trend. And then red yellow lines are lines that change the trend with impact, ones that I'm really interested in, ones that can't be missed. They break into the opposite direction with greater force. Green dash lines are lines that are often for the breaks of those levels. if just because they're a green dash line on there doesn't mean it's a target necessarily, but because it is a target to a bearish pattern. Like this one right here is a very large one, and it was already played out back to this B point here, and you can see that it came back to hit that B point there, and then it was essentially the case that down here these ones were made. We did come back to them many times as well, so we can go ahead and take those off. Um, and then of course we have the blue dash lines, which are previously hit price targets that are still of interest. We have price targets, which are often, to common patterns. Like this one here, it's a B point that I placed in pretty late into the channel. I didn't place it in as it was dumping down or anything like that. And you can see that none of the fibs that it goes to are even in play. It went past the 461, so it's not like that pattern that is really part of my target. I'm just interested in getting back to that point, as it's the tip of an old triangle as well, and the POC to that old range. But as well as we would have the gold dash lines, which are levels of high interest, like 61% levels and so on. I mark those. And then we've got the red zone and green zones. Like typically I'll make this middle area purple, like this, and effectively the price can sit inside of that purple zone, and on the top and bottom we have a red and green, and basically it identifies the high of the range, the red zone, the low of the range, the green zone, and the middle of the range, the purple area. The green dash line here. And just to put it out there, like I'll go over this one more time again real quick, just if anybody missed it. A very similar chart to what we've been seeing, a final red-yellow line to break. It's very far away, and it's going to take some discipline to hold out for its break, but I am confident it will break and continue to all-time high. Those that are still in from below 16K are not as likely to be part of the next major retracement, but anyone above it, buying above the old all-time high, is buying above a potential B point in the long-term future. It may just get frequently tested as we pass it to get to the levels above, so keeping an active management style is key, especially if you're late to the party. If you have the long and you're riding it, the name of the game is to take advantage of these short-term dips while exposure to the upside continues to benefit long-term. It's not like I've just started saying this either. It's the strategy. And, I should have said it's the name of the game. That's what it is. It's been the name of the game. Clearly, I've been saying the name of the game. Just search up freaking name of the game. You'll see how many times I've said the name of the game has been the best strategy in the entire world. There's no better strategy than what I've said the name of the game is. Been to hold from the very bottom and then to hedge it along the way. And you can look at the dates too; they're impeccable. Like I capital letters on like January 1st. I'm like, that was the pinnacle of reversal. I have videos on the reversals before that, but I didn't even go over the January 1st reversal. I made the video on October 13th reversal. But that was after so much fighting already, because I knew nobody kept that. It was hard for people to keep it into the next day. Because look, all of what it had, after everybody experienced everything always coming down to new lows, what made people hold that day? Well, the mindset that you had to hold every day. And you were allowed all of the pullback because you kept your stop at the extreme every day. You had to take off enough profit to make sure that it was safe to keep your stop at the extreme every day. We could start going from slow to fast in a minute. A slight negative response to the red yellow line, but it doesn't look like much. And it's like if we go over yesterday, gives me deja vu. Like this was yesterday in simply 2 posts. I expect that we will lead through the 61. I was typing fast. I expect that we will lead through this to the 61 and B points. I don't. Sorry, we have done a really good job at hitting the green dash lines. Sorry, I was typing fast. We've done a really good job at hitting the green dash lines, and you can see how the red yellow lines are positioned, ready to go for a break to the upside, right? And then you can go ahead and see the next post is literally a freaking novel. But you can see that after this post, I posted this. See those lines are there? Look at how they broke like that. And it's like this is what it takes at everyone. Exposure to the red yellow lines was too slow for most people. Being positioned the right way seems to be inhumane. It seems to be natural for people to give up positions that can benefit them greatly and then turn around to fight for areas that make them work all day for less than if they held. An anticlimactic, non-stimulating morning. Slow grind to start. I literally said it would be slow to start, and then fast towards the end. This is what I've. This is what we were waiting for. The end of these end of day runs will soon be coming to an end too. Um, there's no better rules to follow than the ones stated in the chat here. If you jump in halfway through a plan, don't be surprised if you don't get the benefits of those that started the trade and had the integrity to manage it this far. It's inhumane, as I said. Humans need training to be able to hold to the target. It seems many things make people give up. Um, and then they want back in halfway to the target and wonder why it's hard for them. Stick to the plan. It's like straight up the end of the day. Because it's like how many times, like how long does it take before you wait to the beginning of a new plan or a new journey or a new venture and become part of that, you know? And it'll be tragic if it's the case that, it's going to be a plan that literally goes on for this much and this much movement. It's like, what's the value of staying on top of all the plans? Well, you get to be in for moves like this. And a move like this is worth this much time. 100%. Because everybody had to spend the time anyways. Either, you had something else to be doing or you were catching the move. And if the move is like beckoning a huge payment, I mean, it's worth finding the time to find the exposure. It's only logical, right? But the first step is finding the move to work for in the first place. Because you don't want to make a trade and then figure out why you're in it. A lot of people do that, they make the long-term trade. It's like, oh, I picked up Tesla, now I'm gonna watch the news to figure out why I'm still in. That's like lack of control right there. No control. So, and it's like when people go to seek news for, you know, like I don't know what it is. I guess it's emotional gratification or something like that. And as long as other people are doing something, they feel safe doing it too, even if it's jumping off a bridge. I'm like, I don't know. Seems to be the case though. But I'm like, the first step is having a problem with that. Being like, ah, man, that can't be the way. It can't be that way. It can't be my way. You know, we have to know that we have to work a little bit harder than just looking up news articles. And then just like hoping that they're true, right? When on the other side of the news article, you don't know them, and you know y- they don't benefit off of anything but you just reading the article. So it could be complete bullshit. So I'm like, and it often is, I'm like, they're usually writing articles because they're panicking at the extremes when, they're talking about how bearish it is because it's down and how great it is when it's up. And it just really puts everybody's minds in a really weird spot, in my opinion. Conditions them to buy when it's high and sell when it's low. And it seems to be that that's been, I can't, I've never heard of a time when it's not been like that for some reason. Like I was like told originally by my grandfather that people have been like that ever since he's known. They just want to buy high and they want to sell low for some reason. And they'll go around and they'll say buy low, sell high, buy low, sell high, and then they go in and do the opposite. Kind of interesting. We're at a 127, having not tested the red yellow line. The red yellow line is something that typically gets retested, and we should allow it to retest. Under no circumstances do I think it's safe to even drag a stop above the VWAP. It could have a fake break and knock everybody out that thinks it's going to be a clean retest. After all, it hasn't quite gotten to my green dash line. It's a very small B point, but it's not the B point that I'm really interested in. It's actually the tip of the triangle, but it fit. Put it there. Why not? At the end of the day, it's appropriate. It is a B point, and it's not really been tested. And here's that red yellow line test. Anybody that's exposed should be allowing for it to happen. Now, how's the trend break gonna fare? Are we gonna ride this steep trend up forever? Like, well, you know what? It would be really nice to just like, honestly, as much as I don't want to wait through another consolidation, it would be quite appropriate to readjust the trend. Because what would be the result of having made this? Well, we'd take this trend and make it look like that. Well, that's actually a completely different trend, and it's completely different. Like it's easier to hold. You know that, like if we popped up like 10 points or whatever on this trend, it would buy a little bit of time. But if we chopped and then popped up 10 points, we would have a little bit more time. Not much, but it would be it's significant to them. So I mean, it's like, well, hopefully everybody allowed the retest, because God forbid you did and you lost your position. And it's like that's clear. It's like, wow, off of something that's that normal, that typical, and that common, and I'm just like, well, we must allow those things. We can't be afraid of them. And if they're so clear, can we take part in them? Becomes the next question. Well, yeah, the idea is you should be able to, especially when the candles are a little bit bigger. But I mean, it's not impossible to take part in that. It's just might be a little too small for some people. That's fine. Not the end of the world. I can see it all started with this movement in here too. Spike out of the bottom, consolidation, spike out of the top. And then it came to do a spike out of the top of this consolidation. Kind of had this cheeky one, but we knew that was a fake break. And then it led into the characteristic spike out of the bottom, where it then broke the channel and went up, up, up. But like, remember today I mentioned like the market heard at this point right here. Because this is the point where I'm like, oh yeah, I know what it feels like to have to employ discipline. I mean, like, get ready for that feeling right about there. And that's at the moment, at that time. What time was that? 11:46. Right here, where it just started barcoding. Like, this is absolute chaos for anyone that's involved. Like, think about it for a second. What did the market choose to do to the people at that time? Well, first off, it really made it uncomfortable for them here. Doesn't matter if you're long or short, right? And then if you went long, right, on the green zone, well, you better have seen the red zone because if you didn't sell in the red zone, that was tough, right? So I mean, like whatever profit it took back instantly, and that's like okay, let's say you shorted it in there, it was uncomfortable right off the bat for you, and then what did it do? It came down just to give that entire movement back. So if you were long in there or short in there, it pretty much overlapped everybody's position more than once before they allowed profitability. And I'm like, it's just not a fun place to be in from. It's never. Yep, yep, exactly. Yep. It's with all the people that. Mhm. Yep. Yep. It's just good to know what that looks like because some people they'll see it and they're like, well, what the like if I go back here and then come back, I'm like, where's the spot? I'm like, does can you see the danger still? I mean, like, that's the that's another major thing. We had others. Mhm. Mhm. Yeah, it has. Yeah, even in the event that there's some kind of fake break, persisting with holding to all-time highs is the name of the game. And it totally reminds me of like the daily when we make, the consolidations have a spike at the beginning and then everything kind of chops at them and they dump off. This kind of spike at the top and then that kind of flat top chop with a dump, that kind of movement right there reminds me of the old all-time high when we did this with a spike on the top and then it kind of had that flat top and then dumped off. Remember? We have that same kind of setup where it runs up, has a spike, flat top, dump, and then we go back to the 1 minute. We get back to 1 minute. We have that spike after, so run up, the spike at the top, then the flat top, and then the dump. And it did that. I'm like, okay. I can even see like a smaller attempted version in here. This is what I think it's gonna look like on the bigger picture. Like, how we have this like channel right here and it's large going down like that. Well, I feel like we had another one and it was in here and the result of it was to take that and continue. Just like basically the final result is going to be for us to have taken this consolidation and we double it, which is fine. And that's at the minimum. Double it at the minimum. Consolidation is almost at its end. You're threading the needle right now, like I like to say. Finding that hole in the volume where basically everybody's looking out the window because they think it's going to be slow for the rest of the day. That is the case right now. Watch them at work. Trying to slip through everybody's fingers basically. And it's funny to me too because it's like in the event that they wanted to take some profit there because they wanted to sell there, right? Like think about this. If they got people to short it here, their stops would be buy orders there. So it would create liquidity. Like people would be able to sell into the fact that people shorted it and put buy orders there. So if you create a little bearish pattern right below where you want to take profit, that could provide some liquidity for trimming some off in the event that you didn't want it to have a negative impact. Like let's say for instance there wasn't buyers there and you tried to sell, maybe it actually comes down. But if you create buyers there and then sell into those buyers, it might not actually go down. So I'm like, okay, and maybe they don't want to sell anything at all, but rather just have them get stopped out and they push these positions even higher, even stronger. And they're like, yeah, just drag your stop up a little bit. You can afford another $20 loss. It's like, and then it becomes 40, and they're like, yeah, just drag it up again. Like, it's 100, and now they really start to sweat about it. Then they add some, then they're just absolutely screwed. So we're trying to make that the situation for somebody today, ironically, because that is what the institutions plan. I don't make the plan; I just read them. And it's like, if that's not the plan, then why are they getting stopped out? You know, that's an Why is it formulating for those that did hold there? Why are the assets down here profitable at the expense of those that shorted here? We could sugarcoat it and say it's the news. I mean, it seems to be quite common to do that. Because everyone's just like, oh, okay then. Must be. Must be the news. Yesterday's news too, right? Or it's tomorrow's news probably. Or nobody even knows. It's crazy. The slow bleed can turn into fast. I can see that the method that it uses to gyrate back and forth between the node that we're in has changed. The amount of consolidation that we have has been known to produce this amount of volatility. Because last time we went sideways, for this amount of time, managed to spike out of the top and bottom by an equal distance before continuing to double the range. The final moves consolidation from what I can see. changes are becoming ever so clear and common. More changes. And the more changes there are, the more, we're essentially, it's like a snowball effect. Like the more we can expect change, in the future, the more that we can see, whatever is working start to falter and new things start to form. And basically the idea that you want to continue seeing what has happened shouldn't be as strong. You want to start to expect things that have been happening to start to change, because you can't really take it back. Like when it makes a spike out of the top or bottom of the consolidation, there forever. All it can do is change the rest of the consolidation to make that initial spike seem significant or insignificant in the future. It can make it even on both sides of the insignificant area. That would increase the significance of the spike. It's like if we have a consolidation and then it decides to make a clear spike out of the top, and then it also makes the spike out of the bottom. Well, that means that this is the average size spike for that consolidation, and we could expect that given that consolidation was to form again, or basically like we have here, this amount of size and time converged into a little area like that could provide the same amount of volatility that we did before. We've seen that also like here and here. And like I can't help but notice that, we always seem to make this kind of move. Suspiciously particular. I mean, like, does this move come out of this little area? Is it safe to drag your stop within that amount of movement? Could that be like a 61 could happen? Potentially before continuation of 61? That would be like the POC in green zone. That's pretty hefty. At the end of the day, you can see the benefit from not having to have played the game all morning. But if you held from previous days, what does it matter if it comes back to attack people of today? It really doesn't. It can be very, very difficult for them. You know what I say? What I've been saying since the get-go? Watch the show. You know, watch everyone try and fight and battle and battle and battle because they didn't hold. And it's like if you didn't hold, you have the option to battle or wait for the beginning of a new thing. And we don't get to tell when that new thing is going to happen. We're in the midst of an old thing, halfway through an old trend. I mean, halfway to the target or something like that. Well, the first step is waiting for that thing to finish so that we can see what new thing can form. What changes the existing pattern brings when it comes to an end. I'd honestly be surprised if it didn't fake break. But what we're doing right now, it's ironic because we've managed to make 1, 2, 3, 4, 5, and we've returned back to the first. Not the first, the fourth wave. In this sequence of movements, we started with 1, 2, 3, 4, and 5, and that's allowed us to come back to the first, or sorry, the fourth of the 5 waves. Of course, like I said, no stops are to be dragged above the red zone. And I said that like, I mean, maybe 5 times, I think. And that's a fake break. I mentioned it before, a fake break. It's like it shouldn't come to a shocker, shouldn't cost anybody a position, shouldn't cost anybody any money. They're not really anything like that. Those are micro movements that otherwise could threaten people that don't understand them. But I wouldn't expect people to really be taking them. Um, One day you will find comfortability in being able to take them, but I think that they're far too risky to even talk about taking them. But understanding them and allowing them is the first step. And once you've done that 1,000 times and allowed it 1,000 times, understood it 1,000 times, don't be surprised if you're compelled to be a part of it. And what's funny is people think that 1,000 times is a lot. That's not. Notice that it just came back to the fourth. We've seen this before in other really bullish environments. Funny enough, this is how we got to 16K before that giant consolidation. I remember clearly. Let me just see. I've probably typed about it. Huh. Yeah. Yeah. Okay. Oh yeah, tons. Mhm. Yeah, 100%. Yeah. Yeah. Well, exactly. And like because they see that other people are benefiting off of it being up, then now they're interested. It's human. No. And how common they are. And I mean like even like on every time frame, it doesn't matter if you're looking at the 1 minute, it's like how much does each candle retrace into each other? Even when they don't, like it's like how like it's like find one that literally doesn't have a retracement. It's hard. Even the ones that are like leaping forward, there's some retracement in every one of them. And then it's like, okay, we'll go to the daily and then try and find me another one. It's like some of they're rare, but they're there. And I'm like, well, they're so rare to have no retracements. Even we can go to the weekly. Yearly has incredible retracements too. Here we are. Basically, that big dump was just bought right back out that entire day that we were down there. Like I basically was saying, like everybody was foolish to be part of that. That big downwards push, and anybody that gave their long trades up because of that downwards move, essentially just gets to watch it go even higher now. And it's like it's given them no opportunity to get back in. And if they do get back in, then they're probably going to be part of the next consolidation because it's like what's happened is like basically we're like not a W, but like a pattern like this. It could have been a W, but it doesn't really matter about that move. And effectively, this is the B point, and it's like people are in from before, and it gets to this point, and then they have a down day, and it like convinces them to sell, and then when they buy back in, they're contained within the movement to the B point. Like I don't care if it comes back from the 188 200, or the 261 or the 300 or the 127, they're all a risk to anybody that buys above that level because that's where it's going to end up in the future. I'm like, well, that's where everybody's trying to buy right now. I mean, like it's ridiculous to me. Like it's like I'm like it's cringe. Like I said, that was the one thing that I said about it. It's like it's to the level of clarity that I see it now where it's like it's literally I would say it's the wrong way to trade. Like it's very, very interesting. I'm very confident it would lose money for the people, or at least they will have to be comfortable with seeing losses before they get to see a profit again. And it just means that they have to lack control basically that entire time when they're in that loss environment because they didn't see it coming. The name of the game is going to be to catch the high, and I'm not like really super aggressive about it because I think that we're going to bleed upwards for quite some time. But it's like every single day, it's like it could come out of nowhere where it's like, all right, short-term trade leads into the hedge that lasts 4 or 5 weeks for 2,000, 3,000 points. It could like there's so much going on right now in the world. Something can happen with that, and it could create a pinnacle on the Nasdaq. So it's important to make sure that every single day that you're long, you go into it with a hedge, just like the hedge funds. But they name themselves after it because they're hedged. You can count on it. I mean, that's the deal. Or go to them and ask them. Ask them if they're hedged. Ask the hedge funds if they're hedged. Or are you wasting your time? Like, do you need to? You want to go and ask them? We can. I mean, freaking hedge though. You can count on it. So I'm like, okay, with all that money that they have, their strategies maybe should be more interesting to us. And it's like what they tell you, just understand what kind of people they are and how they go after you all the time. You think the information that they provide on their website about what they do is going to help you? It's like you're their enemy. No, no. Don't be surprised if they lied to you and it hurts your feelings. Yeah, they will lie to you. They'll lie in their reports. They'll lie in their statistics. They'll lie about everything. You can count on it. And they create the news. I wouldn't be surprised. And they know well before their companies are going to release whether or not they're going to do well, whether or not they need to be hedged. They know. You can count on it. They wouldn't be very good if they didn't. And it's like, how is it that I can know about the earnings and they don't? I don't accept it for 2 seconds. They definitely know. They can see it clearly. 100%. And what's funny is hedge funds didn't even exist when Wyckoff came up with the composite man. They didn't even exist in the same sense that they do now. It's like if they did, they wouldn't even be computer generated trades. They have to be human beings manually trading it, everything. So hedging, you know, might not have been so easy. Making short-term trades could be pretty chaotic, I would assume. Yeah, making a short-term trade in 1930s. Oh man. I wonder what the shortest term trade would have been, because there probably was one, and it wasn't something like a millisecond. No. That's for sure. Yeah. Yeah. Yeah, the thing is as well is like it must have been they must have broken down the points into fractions of a point as well because the whole stock market was only 30 points or whatever when the Great Depression happened, so and like 29 to 30 points is like a huge percentage change. So got to be some sort of decimal. But the thing is though is they were the names of they were only like it was only for like pretty wealthy people that could get involved with it, and like they were the companies of the day, like the Johnson and Johnsons and stuff like that. Yeah,
Yeah, like to them, it wasn't like something that might not be around and that was unregulated. Like these were like the railroad companies. Like they were like they weren't getting involved because they liked the idea of investing. They were getting involved because they wanted to be part of the Union Railway or whatever, and they saw it in the Union Railway, and I'm like, well, they saw like a more bigger picture meaning to what they were doing, I think, than what people get involved with now. It's like there wasn't like, oh, I'm just gonna land on Tesla and then figure out why I'm in it. Like they would know. Yeah, exactly. Yeah, it's funny. Because like I tell you, even myself, when I was buying marijuana companies when it first came out and everything like that, I was looking up like, because it took forever. I would try and find articles on something that would change the way that it was, because it was so stale for so long, and I was like, well, when is something going to change? And I'm like, clearly the chart's not giving any indication because it's going nowhere, and something needs to change. And like when you get an industry or a penny stock or something like that that's like that, it's something does actually need to change with the underlying asset. And I mean the market, I've never seen it act like that. I've never even heard of it act like that. Like like everyone knows there's going to be value in the market. So it's not like something that's going to stagnate and potentially, you know, regain its value again in the future. It's like if it loses value, everybody's lives change. Like everybody works every day to make sure that this is the best index in the world and the most profitable index, most profitable companies, and that they stay on top of the way things are in the world. Because it wouldn't be very pretty if it was any other way. So remember, I was talking about that 61. It it's quite it's formulating that move right now. I can't help but notice that we still, well, that would be the 61, but I can't help but notice that it just got to the fourth wave again. This is a potential blocking point. I would be surprised. Well, one thing that I see is a smaller version of what it's done today, though. Like this is really tripping me out now, actually. Like this is one component right here, and it's sideways, right? And then it goes down with a big spike back up to the sideways area, and then it ends up coming down again, basically. And like in a weird way, it did it there. Sure, there was a little bit of a pop, and I guess this was a little bit more exaggerated. But the major thing is we had the sideways move, the down, and it came back to the sideways move, and we made new lows again. So somewhat from trend break to trend break, we have a similarity in what we're doing. And I mean, it's been very common for it to do the smaller version after the larger one. So I just it does make me want to put a line on top of here to consider the end of all of this being hindering on the break of that line, and this being the fake break that it is. I mean, it is a fake break, very successful fake break. So past this point, we could see wicks and spikes.
Go ahead and put some fibs on this last move here. Yeah, the 188-200 is lining up at the 61 in green zone and the edge of the node. So I'm like stretching to hit it, could be on the table, and like immediately we come back to hit this level right here. We're done with it, so we have to watch out for that. Like that's like the baseline of the spikes kind of thing. Like it longs to hit that level, like it wants it. You can see that it's responding to it now. And every time it hits it, gets like less of a important. It's not that. Maybe half as important now that it hit it. But it's still there. It's still probably going to hit it again. So that's the medium bar right there. This level, it's been notorious for making B points off of it. Basically, that's like what it's good for, which I mean, aren't necessarily great places to be in from centralized areas. In the low of the entire range. Basically, a good hedge profit taking spot. And of course, if anybody is just short, you want to be considering hedging to try and get exposure. But if you're already long, then you're not interested in hitting the lows because you're already in. But if you have a side account, all depends. Of course, it's considered like a falling knife environment like that, but I mean, profit is profit. If you do catch it, you catch it. At the end of the day, I think it's far safer to just having stayed in from before. You don't have to play these falling knife games and catch new lows every 5 minutes like it's going to have people doing for the foreseeable future. But still catch it anyways. I caught it on a smaller move. On a smaller contract, but see it hit that medium bar again. That's like where we can see a we'll see another test of that here in a second actually. Watch out for that. Except every single time that it tests it until it breaks it, it'll be lower. This is like part of the. It reminds me of the morning actually. We had a spike and a spring somewhere. I can't remember exactly where. The gold bar getting its test again. And like you want to make sure it's protected. Or trading on the. Remember before, I was talking about, hey, I wanted to see the spikes out of the bottom formulate on the top. Well, look at what it actually ended up doing. It was a little bit more, but I think that definitely had that in mind. And this gives me total deja vu to the Wyckoff that I was talking about on the daily. This one. And it made that spike down. You see how it did that too? Same thing. But basically, there was a trade back up to that bar like there was here. Back to the gold bar pretty soon, but it could be a little bit more flat about it. That's fine. I love it when the big players are playing the game. So much crisper. Yep. Yep. And it's like, yep, yep. 1400. That was 2 o'clock. I've been thinking about that one. But I do, yeah, yeah, it's gonna have to get through it. Is an actual B point. We're at the 361 effectively. Looks like it's trying to fake people out. There's a lot of people trying to go for it, so sideways and chop, it's fine. Fake outs are fine. Yep, yep. Yeah, it seems to be the case that we're always like positioned really far back, and I'm like, well, what the hell is it gonna do with all this time? I'm like, God forbid it was to run all the way to the trend, it wouldn't have any energy to break it. But it is kind of like a fifth wave right now as well, actually, if you think about it. The last pullback that we had, it was like 1, 2, 3, 4, 5. And like it does come from something that was an M, and if it leads, it would be a W in a weird way. Except I'm like, okay, well, remember how crisp and clean this one was here? And then it was like, yeah, like the W. Okay, I guess there was this one after. Oh, interesting. So it went up. that. That was the thing before. Then it did that strange W into M, or M into W, where the M turned into a bigger W, and that did happen. That was the plan. I love the idea of getting back to the green zone and testing the gold bar from above. If I could write sideways on that like I could in the videos, I would write testing the gold bar from above, um, particularly from the green bar would be nice. That would be the idea. What I can write is the green can lead back to the gold. There we go. And this line here too, it's just as good as any other red yellow line. This one, put some bigger fibs in there. Like a fifth wave. It's bigger than the first, that's for sure. Twice the size. Not quite the size of the third though. We're at a two 161s that could lead back to the blue dashed line eventually. We've got to do that. This blue dashed line right here. Very likely that it gets a test. Yeah, when it's very likely like those ones, take some nice moves on it. Just little scalps on my side account while I'm waiting for it to hit the highs again. Mm-hmm. That'll be a long-term one though, eh? Oh yeah, this is the that's the white dash line from the old all-time high. You notice how it just got bought right back up to it like that? That's crazy. I think we're gonna do more of that. I've got a view up down there. Oh, okay. Yeah, 'cause this was the chart that that I was using around the time that you mentioned there. Yeah, yeah. It's common for it to come back and clean everyone out at the averages though. Like even if I put an average in here, see, cleaning people out as it goes up here at the beginning of consolidation. It's like it's trying to spike back to it as frequently as possible. And you can feel the commotion there as well on that one. Getting back to that level is going to be really important, I think. And that's the blue level, which is kind of ridiculous. Because that level's been getting a lot more attention than I would have thought it would be getting. Because it was probably one of the most abstract and analytical methods that I've pretty much ever used to get that. I noticed that the rate that the consolidations were increasing, it was doubling the range. And and it did it 3 times. And that's how that was the third time. And I mean, like, okay, well, does that mean that when it does that, it treats it like this? A little bit much, you would think, right? Now it's hitting my view out. Interesting point. An old range that used to be here, the green zone. Green zone used to have a relationship with that red zone. The other indexes look like they're moving the same way too. Pretty hefty. The green zone led to the red zone. Pretty sweaty though. You gotta be quick with those ones. The red zone is all it wanted to give. They're like, oh, I didn't have the red zone from before. I'm like, well, that's a tiny little range right there. You know what's funny is like it's only relatively small. Actually 16 points, not too bad. Yeah, I got some too. Let's take a look. That's weird. I would have thought that the orange line would be at the high still, and we could return back to it, but it's not like that, unfortunately. Now it's like the blue line will have to stretch above the orange one, and then it will have to come back down to test it from the other side. I don't know how it's going to like that very much. But what it'll have to do, sideways movement at this level could effectively change momentum. They're going to be interested in getting away from each other soon, the lines. Can't believe that the only range that it has, in the area is this little area, and it chose to use it on such a big dump. Decides to confine itself to such a small range. Why isn't that interesting? Anybody that took it from the green zone to red zone yet again can choose to profit off of the move in the range. But only those that that didn't have it can only draw the range in now. I mean, what good's it going to be for them? Not as good as it's going to be for the people that already had it. Two seconds. Another spike. $241's been pretty common lately though. Kind of interesting. I think we return back to the green zone. A little bit tough about it for sure, but I think there's going to be another level. This one. Beautiful movement right back to the green. Just love it. Oh, look at that volume. Nice. You can tell that's the entity. They call it the composite man, if you will. But that ain't the people all ganging up at once right there. That's big money. Oh yeah, sorry. So yeah, no, it doesn't matter. I didn't get the best one either, but you know, as long as you're in, and if you take, as long as you've taken off enough to compensate for the fact that, you know, you can keep your stop at the low. Like, I mean, usually you might take off a normal amount, and you know, you could afford to keep your stop at the low because it was contained within the amount of profit you've just taken off. But if you have a bad entry, then you might have to take more off in order to compensate for the fact that you need a safe um, stop at the bottom. Yeah, exactly. Yeah, yeah. If you don't like the entry and you got the opportunity to cut it, you just do that. Hmm. Yeah. Like right now, it's kind of like doing a weird inverse head and shoulders. Might try and play out a little bit and then take the money back that it gives, thing like that. Because I think it's gonna pull people's legs. Eventually, it's gonna get back to this line right here. This is my blue line, blue and white line. Keep an eye on the other chart. We're still miles off the other trend break. So basically, what I see is going to happen in the future is the market is going to continuously keep giving really nice pullbacks that are going to offer the hedge funds a lot of opportunity to hedge while we constantly bleed upwards in the long term. So everybody that tries to buy in the short term gets wiped out constantly, and effectively we're going to keep bleeding upwards ultimately. But what people are going to be able to look at for the majority of the day is downwards movement every day. Just like, when we were back in the day, I told everyone, like, you can trade on every single day. Rising wedges would always come back down to here. But if you ever tried to trade one on the daily, it's toxic. So it was funny because if anybody ever tried to go for like the home run to like get rich on it, no. But if you if you had the discipline to trade every rising wedge every single day, there was beautiful moves to hedge, long-term trades with. But I didn't know about hedging, so I was like, just interested in catching the rising wedges every day, trading the rising wedges. Hmm. Hmm. Yeah. Take a look here. Yep. It's like that trade that you could take on that millisecond that you intend to just sell for, a target of maybe like 70 points could end up running for 3 weeks, which is crazy. And you could have taken that trade like 7 times where it stops you out each time after you've taken profit at your target, and then it comes back to get you out, and it can happen like every single day for an entire year, pretty much. And that's what it looks like down here. Because nothing really worked from this point until this point. Nothing allowed every single day that you held with a stop at the bottom of the day, no matter how much profit you took off. Like, let's say, for instance, if the day looked like this and it was going down, and then you caught the low of the day and it went up like this, let's say you took 10 and you took 8 of them off here. What is it to keep your stop at the bottom? That means that you've had 1, 2, 3, 4, 5, 6, 7, 8 contracts all worth this amount of profit taken off, and what you have left are these two. And basically that means that those two are what you have left, and it would have to go down this much before you lost only half of your profit. Beautiful retracement right back up there. So I've done it. Yeah, they were. They were significantly easier. But then the last one, it was quick, sharp, fast, and it was like, I mean, the closest fib reversal. I mean, it was like when I said that, it was like, don't be prepared for it to hit the 261 is what I meant. It's like it's like, yeah. Yeah. So I was feeling it is what I was saying. I'm like, well, the reversal being the 241 is okay, is what I meant. Yeah, it's a little aggressive. Yeah, it is a little aggressive though. Not gonna lie. Like it's like I wouldn't make that the first trade of the freaking day or nothing. No, no, definitely not. You take that if you've been having a good day, and you take it with low risk. But yeah, you could take that with just like two or something. It's no biggie. But if you've taken all of the trades successfully, and then this trade successfully, and then you're sitting here like, okay, what can I risk the profit of these two trades? I'm like, yeah, for sure you can. No, not those words. But yeah, you should have just went for it. Yeah. Yeah. Because it's getting to that point in the day where people are out of the way and the institutions are playing the game. Beautiful. Oh, I didn't look at it. Let me look. Oh yeah, we looked at it down there. Yeah. Okay. Mhm. Hmm. Could have a little bit of a negative response here. Did hit the red yellow line too. The green could lead back down to the gold. That's fine for it to do that. Oh yeah. You're still on the. This was the one that I drew it on there with you, but then I had. I think. Wait, this was the one that you were looking at, or no, you connected this. Oh, okay. Yeah. And it broke it. Yeah. Yeah, it broke it on this one too. It should be. Yeah. Mhm. Yeah. And it's like, yeah, and I'm like, it's suspiciously particular that like this consolidation area here with the node here has a huge run, and I'm like, what are the odds that we take that run back to the people place right here? And I'm like, oh, they were like, oh, you didn't find value before the trend broke. It had to be doing this for you to buy in. I'm like, ew. I'm like, no, 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 no. How could that be the best trading strategy in the world? And who's responsible for the reversals? Do you think it's everybody that's late? I mean, like, why do they get to be in from the extreme and you not? And I'm like, everybody settles for less. And I'm like, oh, no, 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 no. That can't be right. That can't be the way to do it, the best way to do it. And if it's like, and if it's not the best way to do it, then why is it your way? I mean, like, it doesn't make any sense. And there's only one right way. The market can be moving, and that's the way it's moving, right? So that's the way I think about it. You can test that blue line from above. Oh man, that's the blue bar that I was talking about before. Wow. Jeez. What is up with that? Why'd they buy it right back up to that spot? Why is everything bought back up to the white dash line again? Very, very interesting. It's the footprint of the people that want to be in control. And I'm pretty sure they're in control and they're feeling pretty good about it. Yeah, yeah. The green zone up there too, eh? That's one place that we haven't hit yet. Oh yeah, I really like that chart. It shows that we come up off of the 188 200 fib channel level and came back to test the middle, and we're almost at the medium bar. And that looks a lot like the other chart that I have. And you know what's interesting? Remember when I talked about it earlier? I was like, I think what we're gonna do is we're gonna take the bottom and put it out of the top, and that's what we're gonna do again here with the medium bar. Wait a second, where is it? Oh, here we go. So we can see how we're at my medium bar right now. It's funny too because they have it drawn the same way, because at the end of the day, if I was to flip it upside down, just like you'll find the 188, or sorry, no, no, sorry, the 61 and the 50 will be on the other side of the range. And it won't be oh, sorry, sorry. it won't be the same levels that we see right now. They'll be a little bit farther away. Oh yeah, yeah. It's actually underneath the way that I have it there. Oh, okay, okay. So you've drawn it up from the top. It's okay. Works still fine. My angles are way off, but yeah, and I found that interesting that the bar is getting used a lot there. Curious to see what it's gonna look like to respond to the other one, because it does look like it's gonna actually make that kind of like S wave movement in here. Okay, so here we are. Watch it for it to lead back to the gold. How quick that was. Jeez. I'll take off these. Like they came back to it to do that in particular. Like before like it even made this move, I could see that the relationship would be that we're gonna want to come back and test this gold bar from above, like an S wave. Like I was just saying, like before it made the spike, I was like, oh, it's gonna look like an S wave. We've done this so far. And it's like the distance that they went below the move, that's the distance that they debatably need to get to the green. So the 61's also here too. Testing that from above is acceptable. Under no circumstances is it safe to drag your stop above the 61. I mean, like, this is the old support line, eh? Like, check out how this support line was like that, right? And it's all the way on the bottom right there. It's actually, like, could have been a red yellow line, to be honest. And look at what we've done to it. The audacity to be on top of it like that. Interesting. Because, like it's the same kind of version of a line like this. I mean, look at how it broke and it was like nice about it and everything. This one, not so nice about it. They're like, oh yeah, you think it's just going to be one tap and go, right? They're like, yeah, right. Not going to be one tap and go. It's going to be like 10 taps and go. And then it was. And but I mean, what is it for the people that were in from here? They just had to endure this blasty bit being taken back. Like all of the people that didn't find value before the break, that thought that this was the point that they should be buying, how did the market treat them? Well, it took back most of the blasty bit, didn't it? Right? That's what I mean. So we don't want to be in late. The market clearly doesn't respect it. Um, and what's funny is like if you try to be in early, like look at how much space there is from here, this trend line, right? From where it reversed on the bottom to how much time it took of grinding and slow to be in for what was good. Like it rewarded those that had the patience for this bull crap because this was tough, right? Like think about it. Think about the people that saw the value in being exposed to these trend lines, because this trend line was created from here and here, so all of these people got to see that trend line the whole time and see the value of what it looks like for that trend line to potentially break and double, and look at what it did. So huge. If you just look deeper than the front value, or with face value, or whatever it's called. And I mean, this trend is working out really well. I'm like, okay. It's got a lot of respect for the only things that are here. Can't help but see that it came back to test the blue line as well, which is intriguing. Sure, intriguing. What about this range here? Like, we used to have a red zone, green zone here, but that's the size. Like, let me, like, just a second with this bar, right? We can see that was roughly how much it used down there, how much it kind of used in here, how much it used in there, how much that consolidation was, how much this node is, or no? Could we use that node? I think so. And I'm like, all right, well, let's take it another step. Is it this distance of the gap even? Or am I crazy? Is it an important distance? Oh, it definitely is. I mean, where did it come from? Long time ago? Not too long ago. It's got normal channel written in it for some reason. It's on the recording though, why that's there. I probably had more analysis drawn in it than this originally. But that's an interesting move. Like, I want to tell you what happened with this. Like, this movement right here did more than double. Like, you could see that the doubling point was the beginning of that green bar, right? And then we went to the 261, which was that red bar. And it came all the way back down to this line, which was the 100. And then we came all the way back up to hit the classic gray bar, which is the end point typically. And it was again that day, for a major move down. Deja vu though, except this time they're a little quicker about the reversal. I thought it was going to take longer. But it's a blessing when it doesn't. And I'm like, I prepare myself for the worst every single time, and when it's quick about it, what's wrong with it? Nothing. You can just enjoy the benefits of it having that moment. Yeah. So that's a node. I just took some more off in there as well. You can see there's a bunch of people in that area. That not bad. Okay, okay. Green zone, heavy acknowledgement of the green zone. That's what I have to say about that right there. Now it can dirty it now, like cover its tracks kind of. It's like, oh, okay, the people that were paying attention will be able to notice that that was the case. Now we're going to treat it like absolute crap, and people are going to question whether or not their green zone's even holding. That's the way to do it. Watch. The VWAP will have something to do with it. And then every single bit of that failure of this green zone, we're going to go ahead and put it on top of the red zone. It's going to look like a negative response to the red yellow line. Effectively, everybody that's short in this environment here, it's very tough because it looks like it's coming off for them, but it's not going to give them enough to take profit like in options or stock trading, and it's going to just grind a little bit. Ultimately, that's what it's going to look like. That's what they're going for. That's how they're going to keep control. That's how they're going to put everybody exactly where they want them in a point of no control. And it's ironic because they use the POC, they name it the point of control. So the people think that when they're using it, they're in control or something. I don't know because they seem to be controlled at the point of control. This is the point that they control the people. All of the people are stuck in this node right here, and you look at it. I mean, like the people that are in from that point have no control. They're in from the middle. They're in from a terrible spot that's been overlapped more times than at any other point on the chart. I mean, like, how on earth has it ever been the best price? It will never be the best price. I'm like, it's not a good area to be in. It's a point where you lack control. It's it. I don't know. I don't know why they name it like that, but that's it's very much the point that everybody is being controlled at, and it's not the point that the most profitable people are at, because you can see that where it actually reverses, there's barely anybody there. I'm like, wow. So now we see the failure of the green zone. Oh yeah, it's exactly what's supposed to happen. Yet again. Crazy. It's like reading it from a book. Like literally the response back to the green zone as well is going to be something that we'll see. And it's characteristic of the move. Very much. Like it's listening. There's the green zone. Why is it so particular? Where's room for anybody else's strategy? I don't know. But it's not something that you can like write down. It's like, where are you going to find this situation again with the green zone and then the VWAP and exactly the everything lined up the way that it is? Maybe you'll see it again. I don't know, but it's just what's supposed to happen. Not it's with discretion can we determine the moves of the market. And some may say that it's insignificant, but this is a candlestick chart just as the daily is, and just because it has more frequent changes, there's more opportunities. I'll tell you where the daily is going to go as well, but you have to wait. And there's a better chance that we're going to be somewhere like in the middle, somewhere that's not the extreme. And ironically, you know, we're getting to those daily extremes again, and I think we'll be there for a while. So we shall see. Remember, every bit of failure we do below the green zone that ironically I said the VWAP is going to have something to do with, we're going to do on top of the red zone. And that's going to look like a negative response to the red yellow line. Like, okay, all right, let's get the letters out here actually again. What we're going to do is we're going to write in, um, that's going to be in the way. That's not done. Oh, okay. No. There's another red zone above. Okay, here's one for you. At the end of the day, if it manages to, there's a couple contingencies here, right? Like this area is allowed to be used as a range. That must be allowed. Look at how much it spiked out of the top and the bottom before. Are we cool with that much spikeage? Is that something that we've done before in this area and is something we can expect it to be interested in doing when it's spiking in this area? I mean, like, well, only every time it's ever spiked, it's been interested in doing that much. We'll keep that in mind as it's, if something is that obvious, well, we need to make sure. I mean, like, okay, what is this little area here? Did we do it here? Was this another area where, you know, okay, my circle's crappy. We can make that better. Like this is the consolidation, and you can be pretty lenient with it. It doesn't have to be absolutely perfect, but when you do this, is it the case that okay, first of all, that could fit in there quite well. That's suspiciously the size of that. Okay, and this also is suspiciously the size of the thing that we're looking at. I'm like, all right then. And then we look at this. Is it like that? Oh, you know what's interesting? Like let's say if I take this one, you know how this one had a relationship with this one? Let's take them both over. Oh no, it didn't have the same spike. Sometimes they have the same time. Because is it not true that this box starts here and ends here? And like I take that and I take it here and it's like, well, is it the same? Oh, it's pretty fucking similar. And this one here too. How much time did we spend at this very level before ending that point? Because is it not true that every single thing that we did at this level, since we hit it, everything came back to that level until that very moment, no? Because everything meant nothing until it got to that time. Then it was allowed to leave that level. Interestingly enough, the same thing was the case with this time, and the same thing was case was with this time. And I'm like, well, is the relationship between these two the same? No, but it could be in the future, so keep looking for it. At the end of the day, it's true that from this moment to this moment, absolutely every single move meant nothing unless you thought it was coming back to that level. And then it was allowed to leave. That's the interesting part. And I'm like, how much time have we spent here? That much time? I know that's not the same method, but it is true that that's how much time we've been at this level. And is it not true that everything has been bought back up to it, not in a series of small moves, but one big one? And it's true that we've had one movement here, one movement here, one movement here, and that made us come back to the middle. So do you know that sideways, up, then down made us come back up to the middle? When you look at what it did there, it did that. That's an idea, but I'm just putting it out there. I'm not 100% on that one. This is suspiciously the size of this node. What are the odds we do it again here? Right now, one thing that we do have to be aware of is this thing. What time does that bring it to? Oh, the close. Interesting. Imbalance must be marked. Check it out. Isn't that interesting that everything's being confined to the similar sized area. Now, it doesn't have enough time really to do this whole thing, does it? Because I mean, it's pretty strict about this area. I guess it could. Oh yeah, sorry, no. Start from here maybe. Damn, that would end it right at the close, pretty much. Yeah. Centralization for the close, some could say. Well, if you look at what it is, like we started here, and like we're ending up here and doing the imbalance. So it's created like a high, created a low, and it's containing everybody in a consolidation that sits in between both of them. That, it's not so abnormal to do the imbalance there. This reeks of them saying they want you long and they don't want you to be long because they want to benefit off of the increase of the assets and they don't want anyone to get lucky, and if they're then basically, like, if you think about it, it really puts everybody in an uncomfortable position down to a very, very small pinnacle of reversal. And unless that pinnacle of reversal is caught, everybody else has to sit and wait in discomfort the entire time, lack control the entire time. The odds are they fold under the pressure, and you can count on it. I mean, it's not us that have to count on it, it's the institutions. So unless you think it's people doing it to other people, but I just don't think that their strategies go that far into it. Like, not even some of them. Like, all of them are just centered around how they can find opportunities to benefit them short term or long term, but put in the minimal amount work possible and try and reap the most reward. But they all get emotional about it. And like, the more that you do it the way that I do it, the less emotional you'll become because, you're just too busy with the clarity that you have to see. I mean, even when it's going sideways, there's so much to think about. Like, all of what I just talked about right there, you know, it could it could be elaborated on in many different ways. Like, I could take so many different things too, like, even instead of those rectangles, like this shape that we have here, this triangular shape, like we've seen this so many times today. And that distance that it was making there, kind of curious about the kind of triangle it's making now and how it has enough time for two. And what has it done when it did two before? Like, could we do two now? Like, ironically, I think we could. And it's been pretty common actually for it to do two, not gonna lie. Because, like, what happens? Okay, well, when the first one ends, is it not true that we spiked this much out? And I can see that we spiked a very similar size spike in general, but it was out the other side. And, you know, outside of the other side of that first spike, is it not true that we had a consolidation and then it had the consolidation? And like, there was another spike that was associated with the opposite side of the consolidation, and it was also this size. And I was like, oh, really? Interesting. Why so many particular similarities with just one confinement area? The work of the public, highly unlikely. Or maybe it's just a coincidence. But like, if you think about it, like, it might seem a little complicated, but it's really not if you think about it. The idea that it's just simple shapes and they're just doubling and showing the same kind of symmetry and relationship. Like, it's like, oh well, it shows one and it's higher and it pokes out of the bottom first, and then it shows one that's lower and it pokes out of the top first, and then repeats all of the same sequence again in reverse that it just did. But it doesn't have to have done it before for us to be able to recognize that it's doing this shape again, and that this could be the result of having confined for this amount of space, and these angles could generate this kind of volatility. And it's shown us that it's already done it twice. So I'm like, what if it shows us it on the hourly? Will we remember it enough? That's the name of the game. Or because it's not on Google, we don't know it. Or those facts that I just stated out, like all of the distances and every single spike and consolidation having the same kind of, like, parameters. It's like, it's a fact that it had the parameters again. So if it did it once and it did it again at different times, at different levels, and respected the same confinement area at the exact same time and took the same time and space to do everything, well, maybe it's a thing. Maybe we will see it again. Maybe it's capable of doing those things because maybe this confinement area means this is the result. And sometimes, like what I've noticed as well in some of the bow tie like patterns, I've noticed that they can start like this. Like they don't actually have to be starting right at the tip like that. Like they can actually overlap pretty significantly. The angles can find respect a little bit overlapped, and I've noticed that. Beginning of the day, it might look a little bit better, but I question whether or not we're actually already starting to expand inside of this thing now, because it has every other time, and obviously we're stuck on the green zone. We're grinding the green zone. I said we would make people question the viability of the green zone, and that's what we're doing, because it's a good play, and they know what they're doing, so they're playing it that way, and that's the way to play it, to put everyone exactly in the right spot. And it's the safest way. Like if you were trying to write a report for how safe you've made it for the people that have all the assets, well, making sure that everybody was aware of a resistance level and a support level, and making sure everyone was aware that we were in the middle of it and then consolidating means that if volatility increases at the point where you might lose control, you can add to a point where they've already seen in the past that is resistance, and add to a point that they've already seen is support in the past. So they understand those levels. It's that much easier to add to those levels to make them hold, because other people will already recognize them. And you will get half of the public working against, some of the public will see those barriers and respect them. And that's the idea. And when they make those barriers clear, it's that much easier to contain everyone for the moment that they could take control. Because the institutions, like their worst nightmare is that everyone starts to sell at the same time, and everyone keeps selling, or everyone starts to buy without them or something like that. It's usually not the case, but the selling thing, it really scares them, because if they don't have a hedge for the time that everyone starts selling, it's chaos. And it's really hard for them to get their assets back to the performance that they were at the very, very top. They're not trying to make all of the money on the hedge. They're trying to own the businesses and get the dividends of being the owners of those businesses for the long term. And that's where the money's at. And while they're waiting for the short term declines to come back, hedges are the name of the game. And that's most of the time until we've got back to these all-time highs. They're going to be interested in pushing the assets higher. This is another opportunity for them to do that. And when they have a hedge, we'll have the benefit of being able to find it with them. And that's the beauty of it. Because we know that as it makes new all-time highs, they don't even have that short. They don't even have that hedge. They too have to fight for it. And we get to fight for it. And that's why it's really important to be part of that. So, move out of the tip of the triangle, came back for a short-term retest, then another spike. But I'm like, it didn't have a VWAP like this one does. What are the odds that the VWAP changes the way that this pattern has to play out? Could something be different about this one? Well, is it not true that this one also comes from a large move that puts it in a centralized area? Well, when this one happened, it was at the high. And when this one happened, it was in a centralized area. Ironically, the more that I look at that, this right here is incredibly similar to we had right here. What are the odds that this pattern is a giant W? Like this one was an M, right? But nobody could see that it was actually a W. And look at how the W played out. And it's like, well, in this pattern, we have an M, but it could end up a W, and a huge one for that matter, because this entire dump would make these highs the B point, and it would then come down as a W, basically like this. I'm curious about that. I'm like, what does that mean? Does that mean that that's the value of the break of the red yellow line? In the event that we break the red yellow line, it's true that it could be that W, so being exposed to the red yellow line increases the chance that we'll be in for what could be a larger move. And I look at that and I'm like, okay, if we were to take the spike, because it is a spike, out of the bottom of the node and put it onto the top of the node, do that. Like it's listening. And remember what that would look like. In the event that we made that happen, we would not have fibs like this, but maybe like this. That would be a 161. No, 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 no. You know what I think it's going to do? Let's take a look here. This distance right here is a 241, right? Now if I take the same fib set from here to here, the 241, okay, that's that level right there. Interesting. Yeah, no, that's fine. At the end of the day, the 241 would be the same distance as this 161. So you take your pick, whichever one you want to see. The 161 or the 241 previous level? Because basically if I take these away, middle right now, but if I take these away, now nothing is showing in the middle. No fibs are in the middle. And this area right here is effectively covered. Now, this distance that it made out of the bottom would be this distance out of the top. The 241 and the 241. So I'm a huge fan of that. So is it not true that they followed the plan and the green did lead back down to the gold? It was pretty quick, but I mean, yeah, no, this is what it is. I mean, it took its time to do this, and this is what it was supposed to do. So, at the end of the day, throughout the period that it was supposed to do it, it did it. Everything it's supposed to do, it's done as far as I'm concerned. Very nice. Stepping on top of the green zone is absolutely acceptable. Like we put a siege node on there. Like if I take that volume away, we take a look at what's on down here. This is what we've just put on that green zone. Wow. Like if we come back from that red zone, it's gonna feel this. Evaporate up there too, short term one. You can see it's kind of like stepped on top of that level. It should be using those other EM bar levels that Super was looking at. The inverse version should have just left them. But it's nice. I'm a huge fan. And in that chart where we had the triangle, was this one? Yeah. Managed to end the triangle at the tip, and being done with that triangle is great. Yep. Everything we've done below the POC we should put on top of it, I think. Starting with the short term move. Because I find that the move that we've done underneath the POC here is suspiciously particular to getting to the red yellow line if we did it on top. Could be pretty messy about it, but that distance on top of the POC is dangerous. I mean, it's like it could make an S wave. Like it could do like this distance here when it was placed on top, it made it back. Oh, this distance on top, it was even a little bit shorter, but I'm still S wave formed. And even if it wants to be a little bit strange about this one, messy looking, like I said, the S wave be around that middle point. And that's on Monday. That's that. Yeah, I think it's going to involve pretty big pushes towards, yeah. I think quite the contrary. Like everybody that is getting ready for the uh, you know holidays, and you can tell that the institutions cannot sleep well until they've got it the way that they want it. That's what I see here. And what does this mean? It means that everybody that was excited about the explosion was then fighting for it all day to continue, or fighting for it all day to get the hedge, fighting for it all day to get the short, and it all comes back on everyone. Like wiping out everybody that tried to get it long in the pre-market session even. And it's like it's yet again the case that people of the last session could hold into the next session without having any difficulty, but um, there was opportunity for great hedges throughout the entire day. The entire day was spent basically coming down against long-term assets, and then at the end of the day when they took back that control, hell, it was like they were finished with all the people, they used them up, and now that they have the control, they bring it back to the middle and try and keep that control. I think that's what they're doing. All about the control. At the end of the day. The VWAP down below has been used many times, and the distance that we went out the top and the bottom of the triangle is very similar. I can't help but notice that even in the smaller consolidation that we did here, it was like, hey everybody, doing an M, and then it turned into a W. I was like, quite intriguing that the last thing to play out was the W, and the M and the W can be very overlapped. What it reminds me of is how we used to do a head and shoulders to an inverse head and shoulders all across the same level. Kind of like it was on track to doing that, except it just ended up with a flat bottom. If it had have made this a lower low, would have been head and shoulders to a head and in a weird way. This, it strangely reminds me of the same kind of pattern that we had here, like a sideways up, down, something that ends up with this trend break upside. Hmm. In the amount of time that it had to do what it did here, remarkable how even it was along the sides of this area. Like the equality can go from making it even on both sides like that, taking spikes that we had on the high, making them the same distance as the middle, putting them out of the bottom, attempting to replicate them throughout the entire consolidation. And it's interesting that we chose to use levels in the future. They did, they would actually come in handy, ironically. But point is it was even, and it could be even with this one too. And I mean, this one being even could mean that we need to do this on the other side. That would be one theory. It's out there, but Not as unrealistic as it may seem. But I can't help but notice this consolidation is very similar to the one that we had first. It made a distance that was very small outside of the bottom. Then it had another distance, which reminded me this move or this move. Kind of low of the node for sure. The retracement that it's done into this pull up here it's not very significant at all. Typically, like if it was a spike and it needed a spring, there would be a bit more. I mean, there has been, but in this trend in particular, it's quite intriguing that even on this push up here, it only had a 41% retracement. I question this. I would still look that at least. 5 wave move on the very short term allows for a trend to be drawn. Curious to see how it treats the 5 wave move. If something's wrong with it, then we may see something wrong with the next one. Now, what I've noticed is the 5 wave moves have been notoriously coming back to the fourth wave. In this case, I just want to see if it even works. Not only if it's just capable of getting back to the fourth wave, it's basically already there. So I'm thinking, obviously the imbalance is coming up very soon. And anything that is done from now to the imbalance has direct exposure to the imbalance. And of course, it's one right before the holidays. Could be the last time that the public has a chance to gang up. 41% retracement wouldn't be too out of the ordinary, and that would. Nothing's really there though. What's here is the white dash line. Everything that's ever come beneath it since we've been around it has always been bought up back up to it. So I think that will remain the case. Now we're trying to step on top of it. I expect us to leave it entirely. Testing the VWAP from the underside. Definitely normal. Increase in volatility that's capable of breaking the trends seen prior to the imbalance. It's safe to say we've spiked out of the bottom of the triangle as much as we've spiked out of the top, returning back to the tip of the triangle. Would be getting back to the POC. 141 of the smaller B point. Yeah, I think it's kind of acceptable because it looks like it was a 141 on the top too. Start with. Yeah, not that anybody should be trading it, but just for the sake of monitoring it. Yeah, the white dash line could also play a role in this because I do believe that everything will be bought back up underneath it. Like if we did a test of the blue and yellow line or blue and white line, could most likely come back to that pretty quickly. Obviously, there's no time left. The imbalance, it could be considered a pretty big one though. Yeah, and if it started moving like it was when it was running up there again, that could be something for the day. Yeah, could say that. The worst place to break a trend from is the VWAP, but I think that this is a small trend break, and we can basically, if broken, we can try and step on top of the V. Yeah, yeah. One thing that I think we're going to see a lot more of is the same kind of distances on both sides of the node, like the 141 on the top and the one. Take a look. Now it's running into that middle bar again, RSI. Yeah. Yeah, you can't really get centralized for the. There's the imbalance. Nothing too crazy. A little bit of a pop up above that to make the W, but not much. Effectively threatening that we'll end the triangle for the end of the day, but nothing too red zone above is starting to become something of interest. And every bit of movement that gets to the red zone could be taken back. What's that? Ranging? Yeah, we are totally. What's that? like that. End of the day, it did what it was supposed to do, and it's breaking towards red zone. That's the close there. At the end of the day, I expect it to be in the red zone shortly, but hopefully you guys have a wonderful Christmas and wonderful holidays, and hopefully you have a good weekend, and I'll catch you guys on Tuesday. Yeah, Merry Christmas. Yeah, have a good one. Take it easy, guys. Yeah, you too, man.